Hi everyone, Paul here, and if you're trading crypto markets at the moment, you're probably feeling a little bit confused. I know I certainly am. And there's a lot going on at the moment. There's a lot of data to look at. There's a lot of, arguments and reasons as to why the market's doing what it's doing. I've talked about futures leverage and about large wallets and professional investors accumulating in previous videos as my sort of basis for what I think is going to happen. But I stumbled across a little bit of data today which is quite interesting, and I think it might give us some insight into why there might be selling pressure in the market at the moment as we hang around this 42,000 mark. So let's dive into some of the data and have a talk about it. So if we start off just by looking at our daily chart, you can see that not really much has happened since my last video. We obviously broke through that trading range that we'd been sitting in for a good month since the beginning of December. We broke through some key support there, about 45,000, and then we've dropped down past this other key support level at 42,000. So at the moment, the battle is here at this 42,000 level, and really what happens now is sort of going to dictate what happens in the market, for the next little while. So obviously a breakdown below this 39.6 mark, that's going to be a bit of a problem. We're looking for a break to the top. Now, I've said in previous videos, my expectation is that we'll see a significant push to the downside and then a shot back up. So I'm not really going to be surprised if we see a significant push if we go back to the daily chart. Sorry, that was the 4-hour chart. I won't be surprised if we see a big candle like that, down here somewhere. So, a push down, and as long as it gets bought back aggressively, that's fine. We're hoping to see a close up here and then, a push down there. So what we're sort of expecting to see is something that looks a bit like this, like that. So it may not necessarily resolve exactly like that, but, that's sort of what we're expecting to see. A big push down, aggressive buyback, and then a shot to the upside. So, that would be a really positive sign that all that leverage and all of those weak hands have been cleaned out, and that's going to really supercharge that move to the upside. So let's have a look at some of the data in terms of what's been going on in the news, and just some interesting information that I just saw this morning that I think offers a different perspective on what's happening in the market at the moment, because I haven't really seen anything about it. And when this initial news about the Kazakhstan mining operations being shut down happened, I didn't really think it was a big deal. But let's jump in and have a quick look. So I've just got some various clippings here about the Bitcoin mining outage that happened in Kazakhstan. So you may not know, you may know, but the large-scale mining operations in China were shut down not so long ago, and a lot of those operations then moved to Kazakhstan because they have, favourable energy rates there, which makes it, a good place to set up mining activities. So they've had civil unrest there. The new mining operations have spooled up there, both official and unofficial, and I think it's the unofficial that was causing a bit of tension with the Kazakh government. But regardless, the total capacity represented about 20% of the Bitcoin computational supply, so a pretty significant amount. So, and you can see the effect of that shutdown basically reduced capacity across the whole network. So you can see here, network hash rates tumbled 13%. So that was felt throughout the market. Now, when this came out, it was about the same time that the Fed notes came out, and the market pulled back pretty savagely. So, there was talk about this, but most of the focus was on the Fed notes. And I have to admit that myself, I didn't really think this was a big deal, because really all it means is this capacity is taken out of the market, and then the competition, if you like, from other mining rigs is reduced because all this capacity is out. So that's actually a net good thing if you're a miner in other parts of the world. So I didn't really think this was too big a deal. But the thing that sort of changed my mind about that is I was looking at some data this morning. And what this data shows, this is a chart of the miner net flow. So this is basically the net flows of miners moving Bitcoin onto exchanges. So, obviously if the net flows are negative, they're taking it off. If it's positive, they're putting it on. And you can see here on this chart that we've got this massive spike here. And, not surprisingly, when I was just looking at some charts this morning, this really stood out. And I went back and looked more of the data, and the data that I have goes back to early sort of 2019. And there's only one other day in history, in all that history, I should say, which is higher. So this is, it can't be a coincidence. I would say what's happening here is you would have all of those miners, even though they might have difficulty getting to the internet, they'll be, I suspect, liquidating all their Bitcoin and converting to cash or US dollars, because if you're in a country that has civil unrest, probably the best thing to have in your hands is some US dollars, so that you can use that to buy food, or maybe get out of the country, or whatever you might need to do. So I suspect that's what this is. It's the only thing that I can sort of piece together. And if that's the case, this enormous spike of supply is going to be an additional downward factor on the Bitcoin price. So it's not a great time, given that we're at this 42,000 mark, and it's a pretty critical juncture for the market. But if we don't really see any movement, then I'd suspect that this would be probably one of the culprits. So I hope that insight was helpful. As I said, the market's in a pretty weird place at the moment. I've sort of been keeping an eye on things. We're not seeing any of those big wallets accumulating in the market. We haven't seen a flush out of those leverage longs. As I've mentioned in a previous video, I'd suspected that a lot of those leverage players had maybe converted from collateralized positions to cash, and that's why they weren't getting squeezed out. But if you look at the price action, we're just really hanging around that 42,000 mark, and there's not really a significant push in either direction. And so there's no real sort of good explanation for why we haven't seen a move by anyone yet. And so, that was what prompted me to go and have a look at some other information and just start to sort of have a bit of a sniff around. And so when I came across that net miner flows, that sort of piqued my interest. It's obviously, number one, a data point that sticks out because it's just so much bigger than the others. And then obviously the only thing I could put together was the civil unrest in Kazakhstan. So, that's not necessarily going to dictate what happens in terms of a significant direction. You'd think that that's probably just going to add a layer of downward pressure on the market. I don't think it's going to crash it or anything like that, because we've already had such significant moves, and a lot of that stuff's priced in. I haven't heard anyone mention anything about this on, in press or in YouTube channels or anything like that. So, it's just my theory. That's all it really is. But I think it also helps to explain why the market's just subdued. It's just in a weird place. There's a lot going on. We don't really know how all the actors are moving, and everyone's just waiting. So, hopefully that's another little bit of information that helps you out in terms of your decision making. And I'll see you in the next video.